Hello, everybody, and welcome to our webinar on EasyETFs 3 new AMETFs. It's really cool to be able to kick off the festive season with what I think is a very festive topic. So I'm really happy that you guys are all here joining us today. I am joined by Nicola Comninos, our Group Executive Investments and Chief Risk Officer. Nicola, thanks so much for hanging out with us.
Cool. Thanks, Connie. Thanks for the invite.
Yeah. So guys, we've had so much interest from our community around actively managed ETFs. And I must be honest, like I was pretty clueless until recently about what they actually are. And what they are essentially is a more, in the name, as the name suggests, actively managed portfolio that you can trade on the JSE very easily. So different from a unit trust in that way, and different from an ETF in that there is active management. There's a portfolio manager. It's not necessarily just following an index. So quite an interesting little class of its own. And what got me next level excited is the fact that I can now invest in AM ETFs in my RA, which is very cool. I did that this month, and we're going to talk a little bit about that and about EasyETFs 3 new AM ETFs. That's quite a mouthful. So Nicola, talk to me about EasyETFs and what the appeal was in creating your own AM ETFs. What kind of appetite do you think there is for them?
Yeah, so I think, Carly, the first place to start with is obviously we are part of EasyEquities. And so for EasyEquities, we look at what our clients want. And we've seen a whopping 43% of our clients' assets being invested into the product type ETFs. And so exchange traded funds is a product that our clients are quite comfortable with. They've gotten used to them. It's fully transparent pricing. It's available on the stock exchange. You can buy it during trading hours. It's really, as you've said, a basket of either shares, bonds, properties, different instrument types that's put together, and you don't have to go and look and do a lot of research and try and find which shares or which bonds or which property to buy into. You can just buy that one ETF and you have an exposure to a whole basket of different investments. And it generally, as you've said, historically has just given you market returns. But the beautiful thing about active ETFs is that now helps you to also beat the market. So you can add an active ETF to your portfolio so that you can also get those additional returns above and beyond what market returns are. And so these have also just come with highly competitive fees. And I think we might talk about it a little bit later, but in our experience now, having brought to market active ETFs, we've actually observed that they are more cost effective in some ways than unit trusts. The industry has some opportunities to add some cost efficiencies in this structure because of the way that it operates. I don't want to bore you with the details, but essentially we have full end-to-end sight of the value chain, how you buy and sell the shares in the market, how you put it together into the product wrapper, who does the administration, who does the accounting, the tax, etc. And all of that in the ETF wrapper turns out to be more cost effective than what the product was in a unit trust wrapper.
Sure, I didn't know that. I'm really, really glad that you unpacked that a bit. That's an awesome benefit. So let's talk specifically about the 3 active ETFs that EasyETFs has launched. What are they and what are their objectives?
Okay, so the first one, which was our EasyETFs AI World AM ETF. So the short name on the JSE is just Easy AI, so easy to go find it. And essentially, we listed that on 25 October, which is just over a month ago. And you can access those in your TFSA or your ZAR account. And essentially, the key objective of that fund is also hidden in the name, AI World. So it really is looking at all of those leading global companies that are either part of the creation, the adoption, or the deployment of artificial intelligence in their various industries. So it really looks at the end-to-end value chain of companies and looks at whether those companies are future thinkers. Have they started adopting AI in their various processes, whether they've done it in their infrastructure, in their hardware, in their software, or whether they're a service provider that helps deploy. So it really is an ETF that just helps you invest in the digital economy. And we're very proud to say over a month, we've had this product trading in the markets and the returns have been over 20%. So really is a leading theme if you look at the AI theme in itself.
And lots of, I think, recognizable companies in there, Nicola. Hey, I was looking at it and I see you've got Meta in there, who we all know what they do, and they're doing some pretty groundbreaking stuff around AI. And Palantir also been making moves in the market. And we've got a little bit of research on that on our blog, so you should check that out. But some really cool big names in there that are driving interesting stuff around AI.
Yes, exactly. And I think some of the names have now become sort of household brands. We're all talking about NVIDIA as if we all knew about them for a very long time.
I know. My mom spun that off the other day. She was like, "Oh, I've invested in NVIDIA." I was like, "You know what NVIDIA is?" She's like, "Of course I do. Everyone knows what NVIDIA is now." I was like, very impressed.
Yeah, so I think that just makes, well, that should give you some comfort, is that we've got an active manager. So it's an asset manager that will continue to go look for those new NVIDIAs, go and try and sift through reams and reams of data, public and private information, structured and unstructured data, and go and find those hidden gems so that we can then just go and look what's in the AI ETF and then see whether we want to hold some of those shares as well, which they've uncovered for us.
Great.
And then the two other ETFs, which are still brand new in terms of being traded on the market. So we listed them on the 22nd of November. So they've been trading for just over a week on the stock exchange, but they're not new funds. They've been around in the market. They were unit trusts and they performed quite well, both in their individual rights. And we've listed them formally, as I've said, on the 22nd of November. So the one is the EasyETFs Global Equity AMETF. So short code there, EasyGE. So it really is looking at global shares all over the world, high growth global companies that will give you exposure to innovative and market leading businesses worldwide. And so again, similar to the process that I've mentioned for the AI World ETF, for this global equity ETF, our fund managers go and look for those companies that will unlock future growth. So those hidden companies that are following themes and doing weird and wonderful new things that maybe won't be everyone's common knowledge now, but will become those NVIDIAs of the future. So that's the global equity one. And it's really done phenomenally well. Its 1 year performance at the moment sits at 78% returns, which is the number one.
That's
it was the same.
Trust. Okay.
So yes, so remember it was a unit trust, and then we converted that into an active ETF. So it got the technical terminologies, we amalgamated it. But yeah, I think just looking at that 78% returns is just phenomenal. It is at this very point in time, as we stand here today, ranking as the number one global equity fund available in South Africa. Really phenomenal returns. It itself also has some components of some AI investing, but it brings in other themes as well. It doesn't just focus on AI. It focuses on other types of leading themes as well, like attention span is a theme. So looking at companies like Netflix and YouTube and those sorts of things that are performing well as well.
Great. And then you've also got the balanced fund, and that's Reg 28 compliant. What does that mean?
Yes. So last but not least, the very important, and I would call the sort of safer version, which is a balanced fund. And this one is available in your retirement annuity. And our regulators in South Africa have a piece of legislation that they call Regulation 28, which really just means that they limit the amount of risk that you're able to take in certain types of funds. And so when you are compliant with that piece of regulation, you generally have what's called a balanced fund. You could also have a fund under Regulation 28 that just invests in very low risk assets like money market, fixed income, bonds type of instruments. But generally, it's going to be really hard to get nice, superior returns if you don't bring a bit of shares in there as well. You've got to take a little bit of risk. So Regulation 28 does allow you to invest in shares, but it caps the percentage that you can allocate to shares so that you also have a bit of those low risk assets in there. And so this balanced fund, also it was a unit trust that we had under EasyAssetManagement, and we've amalgamated it over into an active ETF. And currently also this fund is doing phenomenally well. Returns under the 1 year ranking is at 30%, and it's ranking in the top 3 of balanced funds that are available in South Africa at the moment.
Well, congrats. That all sounds like very, very promising initial results. So congrats to you guys. You mentioned the amalgamation of these from unit trusts into AMETFs. Is that something that happens a lot? I've never heard of something being amalgamated from a unit trust. Can you chat about that?
So the concept, yes, of amalgamation is not a new concept, but taking a unit trust and amalgamating into an active ETF is a very new construct, and it is the very first of its kind that has happened in South Africa. So we at EasyETFs have really set an industry new, and so we hope many will follow, because essentially it takes all of the assets that were invested in that unit trust and it moves it over into the structure of an active ETF. But as part of that process of moving it over, like I explained to you, you can also look at the end-to-end sort of value chain of who's involved in managing those assets. Because if you have a portfolio like an active ETF, you've got to have an asset manager that goes and thinks about what do they want to do. They go and research. And so obviously there's some fees involved in their part of the process. Then they've now decided, okay, which are these leading companies? And now they want to buy the shares. So now there's a stockbroker involved and there's some trading in the market involved. And those are costs that you need to consider as well. Then these instruments trade and clear and settle. So there's so many steps in the process. There's the administrators in the background that make sure that the pricing is correct, etc. But in an active ETF, because we now have full oversight of the end-to-end process, we've managed to actually extract some efficiencies in that, which led to about 1.2% improvement in the total investment cost. So when I say total investment cost, that's generally when you look at all of the costs that go into being able to run a fund.
Yeah, that 1% sounds small, but actually compounded over time, that can have a massive, massive impact on your sort of what you take out, your return on your investment. So that's a really good point.
That's an important point, because sometimes on average, asset managers only beat the market by sort of a 1.5% return. So that could be your big differentiator.
100%. So you've touched on a little bit on the management of these active ETFs and some of the strategy. I want to bring that all together and talk a bit more about that. So who are the managers of these AMETFs? Can you tell us a bit about EasyAssetManagement?
Cool. So EasyAssetManagement is also part of the EasyEquities family. And it is really what I would call a next generation futures thinking differentiated type of asset manager. So what we do in that business, it's a group of very bright minds that do very in-depth, extensive research, but also augment their decision-making with the use of data insights. And they do that by using sort of leading disruptive technologies and consuming vast amounts of data, which could be qualitative data, like market sentiment. It could be Twitter feeds, it could be Facebook, social media content about certain companies or trends. It's also a lot of quantitative data, so things from the financial statements of companies, how well are they performing from a profit perspective, from a cost-saving perspective, what are the new products and services they're offering. It uses both structured and unstructured data, public and private. So you can just imagine the sort of massive machine in the background as well that has to churn through all of this data and find connections between them. And what we connect those with is what we call themes. So we go and have a look at EasyAssetManagement, those sort of bright minds that I've mentioned to you, go and think about what are those major themes that will lead future generations. So we don't think about today, we think about what will be trends in the future, very much like things that are trending on TikTok and whatever the case might be. But we think larger in terms of trends of the global economy. And then we put them into little buckets that we call themes. And then within those buckets that are called themes, we try and select the top companies that deliver on that theme. So as an example, I mentioned the attention theme. So some of the top companies that are grabbing people's attention are companies like Netflix. You know, people are binge watching. So you want to have those types of companies in that theme. And then we've spoken about AI and some of the top companies like NVIDIA that's doing really well there. So there's different theme buckets and then different shares put into that. So I would just in a nutshell sort of say it's the best of both worlds. It marries man and machine, sort of putting together tech, data, and then brain power, and then be able to find what I call those sort of hidden gems, next generation of leading businesses across the globe, and put them into a portfolio for you.
I love that you're kind of hitting on that, those unique little pockets of opportunity that might be overlooked by most, because I think that's what we're all looking for. You know, we're looking for, you know, clear out the noise that's all over the internet and on social media and maybe around the braai, and like, what are the actual underdogs right now that are going to shoot the lights out in time? You know, I think we're all looking for those. So it's great to know there's an expert who has the science and the knowledge and the experience that can do that. The other thing that I really liked when I chatted to the EasyAssetManagement team earlier this year, and I think you were there, Nicola, was I just found their approach to risk really refreshing. You know, with the idea that so many people do not take enough risk to be able to retire. They don't take enough risk to have what they need to survive and live comfortably at the end of the road because they've been too conservative. And so they have a healthy risk appetite, that team, while having all of these, you know, these data points and science to really back it up and make that risk informed and calculated. I think that strikes a really nice balance, you know, for investors who have that long-term horizon, that can afford and want to. I know I want to take a little bit more risk. I wouldn't say I'm a spring chicken anymore. I'm not that young, but I still want to take a degree of risk in terms of especially for my retirement savings, which is why I love that this AMETF is one of them is available in the RA. So that I thought was a really good approach that they took.
Yeah, and I think we think about risk. We don't think about risk in the right way. So what part of the role that I fulfill in the group is a chief risk officer. And the key thing there is not about worrying about what can go wrong. It's more about what are those things that I don't do today that will potentially eat my breakfast in the Kodak moment in the future. So how do you think about those risks that you have to take to create opportunities for your future self? So taking that bit of money, putting it away, investing it in your future self. So if I think about people that retire, some people retire early ages, and for me that's young, around 55, 60, they still have 20, 30 odd years to live. That's a very long time. You still actually have quite a long investment horizon, and you can take quite a substantial amount of risk to still invest in the markets, in shares, to maximize your returns. So yeah, I do think one of the biggest challenges is that people are too conservative potentially, and sometimes just leave money in a fixed deposit because they feel that there's no risk of that money becoming less. But you have to take a certain amount of risk to be able to be comfortable in your future retirement state.
Yeah, future-proof yourself. Right, Nicola. Yeah, is there anything else you want to add? I think you've given us some really great things to think about, and I would encourage everyone to go and explore these new AMETFs from EasyETFs. You can look at on the EasyEquities platform. They're available, like Nicola said, in your ZAR and TFSA account, and the balance fund in your RA account as well. So go and check those out. Anything more from you, Nicola?
Yeah, I think it just in closing, active ETFs, I think, is the next big revolution. We've seen them significantly increase in terms of growth and size globally. We believe it's the next big trend in South Africa as well. It gives you transparency. You can trade real time in the market. The share price is fully transparent. And for the ETFs, the easy ETFs, products, you are able to see, as you said earlier, Carly, exactly what we've invested that ETF in. Whereas with unit trust, it's often delayed. You can't really see what they've invested in. And also you have to wait for the price. And so in this case, I just think there's so many benefits for investors. You can see that price, you can see the underlying investment structure, and we've managed to also save a bit of costs in the end-to-end value chain. So really a great product to try to add to your investment portfolio, and to continue to beat your market returns and save for retirement.
So someone's just asked us, and I think if you can just repeat for all of us the 3 names of these new active ETFs so we can find them.
Sure. So the short codes on the JSE, which is probably the easiest one to get, is EasyAI. So that's the AI world one. So it's just easy, and then the acronym's AI afterwards. And then the second one, the global equity one, the short code is EasyGE, so for global equity. And then you can go find that. But if you search under your EasyEquities portfolio, well, on your wallet, you can also just type in Easy, and the instruments will come up. So you'll see the EasyAI, I've said the first one, the EasyGE, and then the EasyBF, which is the balanced fund. So we try to stick with the sort of themes of easy, and then we added the BF because that's then the balanced fund theme. So those are the 3.
Great, guys. So head over to your Invest Now page and type in EasyETFs with an S, and those 3 options will come up in your various accounts. Nicola, thank you so much for having us, and for joining us, and for having me. And we'll chat again soon. Thanks, everyone.
Awesome. Thanks, Carly.